Hey folks, my guest today is Philippe Brodeur. He fell in love with video by making it as easy to manage as Word documents through his current company, Overcast HQ. That's overcasthq.com. Before that, he spent over 20 years for iconic creators like the BBC and Disney. Now does it for businesses that innovate around marketing and product development. Philippe, you ready to take us to the top?
I certainly am, Nathan.
All right. So just to be clear, you're not an agency, right? This is a software, a piece of technology you built.
This is a piece of technology. We are not an agency. It's a good question, though, because people often think that we are an agency. But no, it's technology. It's SaaS. You can either buy it online or get a managed version through us.
Who's buying it and what are they paying for? How are they using it?
Well, COVID changed everything, right? So we built a media asset management or video asset management or video content management platform. What does that mean? It was built for businesses, and it's much like what a librarian would use. So only a few people would use it because it was a big, heavy platform and fairly complicated to use, kind of like a digital asset management platform, which is generally used by few people. So what happened was during COVID, we've got this little viral thing that goes on in it where you can invite a collaborator to come in and start accessing content. Well, during COVID, what happened was people started to share it around, and our interactions on the site grew 13x in 2020, like 13x. So and the number of users grew almost 5 times. So what happened was all of a sudden people started to understand, well, hey, I can actually manage video in the cloud. It's very difficult to manage large files on premise, but managing them in the cloud, well, that's a different thing, right? And we made.
Well, you just be clear, you're not an on-prem solution, right? It's all in the cloud.
No, 100% cloud native. It's all it's serverless and it's a modular microservices architecture. So I don't want to talk too much about technology, but basically we're making it possible for people to manage video the way that you manage Word documents. If you think back, well, you're probably a little bit younger than I am, but I remember back in the 90s, my father, he had a secretarial pool in his office. That's not that long ago, right? A secretarial pool.
Yeah, Philip, I have no idea what the hell that is, but it sounds like something I don't want. I think my audience though knows this space. Well, I mean, we had the Frame crew on recently. Like, sure. A lot of them use Frame.io. It sounds like you were sort of playing in the same space, right?
Yeah. So we are very much playing in the same space. I think there's a couple major differences. Like, so for one, we get compared to Frame.io a lot, right?
Yep.
Frame.io are a multi-tenanted SaaS. What does that mean? That's Frame.io. When you buy Frame.io, you buy Frame.io, right? And it's part of your SaaS stack. When you buy Overcast, we're a white label version. Okay, so what we're doing is we're integrating with your tech stack already, and we're moving into the background. Okay, so we're not the ones. We're not saying that this is our brand up front. We're actually helping to manage all the big content.
Why is that important for you? By eliminating your brand, you reduce your ability to drive word of mouth and freemium and sort of new, CAC arbitrage signups. Why'd you make that decision?
Well, Intel Inside, right? Like no one ever went out to buy Intel, right? But Intel Inside really works, and I think it works for video as well.
Mm-hmm. Help me understand these folks that are using you. What are they paying on average per month to use the technology?
Yeah, so they pay. They pay a per user price, and then they pay a usage price as well. So it's never really that easy to understand. I suppose on the low end, we do sell at about $500 a month.
Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your FounderPath dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right. So the teal is what a VC would pay. Yellow is what private equity. And red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raised. They sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of FounderPath, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview.
But that's really a self-start as a SaaS product. It's very easy to get up and running. And that would be for a small team of maybe 10 people, right? Mm-hmm. But then we're selling right up to 20,000, 30,000 a month as well. And we're going into enterprise. And what are we doing there? So imagine you're a Unilever.
Well, Philip, just to be clear, is that the spectrum? Lowest is sort of 500 a month and your biggest customer is paying 30K a month?
Yep.
Okay, got it. And how many, just paint the picture of the big picture. Like someone paying you $30,000 a month, how many people are on the team and how are you measuring usage?
So how many people on the team? We've got 20 people on the team at the moment. And in terms of measuring usage, in terms of like the amount of content.
Well, yeah, that's exactly what I'm asking is how do you quantify it? Is it number of videos, number of storage space, number of minutes processed? What's the metric?
So all of the above, in fact. So we look at interactions. So we've got comments, annotations, we've got video processing, we've got sharing, we've got downloading, we've got reformatting.
Isn't that complex though, Philip, to track? Like, don't you have a key metric that is the most important one, and that is what usage and pricing is tied to?
So it is a calculator. You're right. It is complicated. And we do a customer deployed solution with AWS. So what that means is that we can with larger companies, and this is really key actually, with larger companies, they can do they probably already have an account with AWS, right? They probably already have their content stored there. So we can deploy on top of their storage. It's a bring your own storage module model. So when you say, what is the key metric? Yeah, in that case, it's a license fee, right? It's the number of people that are using it, right? And in fact, all the hosting and all the storage is paid directly by the client to AWS. We also work in Azure.
I see. Okay, cool. So that's the range. Yeah. That's the range, and that's really helpful to understand your pricing. I am going to try and force you here though into a sweet spot. So, right, what's a sweet? I mean, is 10K sort of a month your sort of sweet spot right now, or is it a lower or higher?
Yeah, so we try to start at 5K a month. We don't chase anything under that because really it's hard to make a profit on that. But yeah, 10K would be definitely a sweet spot.
Did I mishear you earlier? Sorry, I thought you said 500 a month would be 10 people. Did you mean to say 5K or did I mishear you? It's 5K a month for 10 people?
No, it's 500 for 10 people. So we have a SaaS product, right? Which is built. It's simply for small teams, right?
I understand that, Phil, but you just said you don't start under $5,000 a month, but you're saying there's a $500 a month SaaS plan.
We chase. So we do two types of sales, right? We do hunting. All right. So we hunt. We hunt enterprise, right? And that starts at 5K, sweet spot 10K. Absolutely.
I see.
Correct.
Sorry.
Right?
I should have asked my question differently. I'm not asking necessarily about outbound. I'm looking at if you look at your current customer base today, whether you hunted them or they signed up freemium and upgraded themselves, the current sweet spot in terms of size of account is something like 5 to 10K a month. Is that accurate?
Correct.
Okay. Let's go build the backstory out here. When did you launch the tool?
So that's one thing I don't like saying either. I like calling it a platform because it's a big heavy piece of software. that's in the cloud. So we actually launched in 2018, and that was probably 2 years after we started coding.
Okay, so how did you fund yourself between 2016 and 2018?
We got grants, and I had a good exit before that, so I was able to fund myself and our original development team.
That's obviously a great position to be in. I love obviously a bootstrap founder. What was your first company?
First company was well, I had a couple of them. One of them was Hot Air Productions. Another one was ALTV. Another one was Air TV. I've had a number of video production companies.
Is this your first sort of SaaS play?
It is. It's definitely the first software SaaS play. So what had happened was I was actually working for a number of other large broadcasters and telecom operators, building their platforms for them. It was like an intrapreneur, right? And then what I said was, why don't I do this for myself? I mean, it just took me a couple of decades to get there.
Interesting. Okay, so if you had to estimate how much you had to spend yourself in those 2 years building the MVP, what would you say your total exposure was?
About $1 million.
Okay, and looking back, were you pretty efficient there, or could you have done it for $250,000?
I think we were pretty efficient. I think the biggest challenge was that we were early, and timing is everything. So I think that you look at COVID, that's been a great incentive for people to start working in the cloud. You look at what happened to Frame.io. I mean, absolutely brilliant stuff with what they've done, getting it
over. Did Adobe over or underpay, in your opinion?
I think they paid a really good amount, and I love them. I love them to have a look at my platform as well.
What do you believe that? Obviously, it was public that it was a $1.28 billion deal. But what's your best estimate on what that multiple was?
Oh, a lot.
Do you know what Frame's revenue was, or a range?
I do not. I think it was around 40, 30, 40. Is that right?
Yeah. I don't have any insider information, but we also put it around that amount.
Yeah, that's where I think it was. But what they were growing fast, and I think Adobe, what they did was they said, look, collaboration in video is the future, and they set down a marker and they said this is going to be a really valuable thing going forward, right? And that's what we're saying as well, is that there are very few stakeholders in the business community at the moment who actually take part in the video in the video supply chain, right? It's still engineers and editors predominantly, absolutely predominantly. The cloud's going to change all that. It is changing all that, and that's where we position ourselves. And that's exactly where Frame positioned themselves as well. Although Frame, much more prosumer, we're much more enterprise.
Yeah, I would agree with that. Yeah, you guys are lower volume, higher ARPU. They're a lower ARPU, higher volume.
Absolutely.
You code from 2016 to 2018. First customer 2018. How many customers are you now serving today?
So we've got about 200 clients at the moment, and we're doing, I don't know, about, I don't know, I think about 5,000 users, something like that.
5,000. Okay, and those 200 are all paying customers?
Yes.
At the $5,000 to $10,000 average price point.
So like I said before, we started off at a very low level, and we were getting people on at a very, very low price point. And now it's been all that progression happened during COVID when we went into the enterprise market.
So is it fair to say that your average customer is paying something more like $500 or $1,000 a month versus like $5,000 or $10,000 a month?
Oh, absolutely. Yeah.
Okay.
Yeah.
And that's because you've increased your pricing. You have a bunch of early customers that pay much less.
Yeah. Okay. So we went out to find, to get basically people to pay for it and use it, to value it, learn from them, understand what works, and then go into enterprise.
It's a super smart strategy. No, that makes tons of sense. I just want to make sure I capture your story accurately here. So 200 customers at an average point of $500 a month would mean you're doing about $100,000 a month right now in revenue. Is that about accurate?
That's about accurate. Yeah.
That's great. And if so, what were you about a year ago, so we can calculate growth rate?
So we were growth rate. I don't have the actual number on that, but growth rate is about 4x. It's just under 4x.
4x. Okay, got it. So you're doing about $25,000 a month a year ago.
Yeah.
If you 4x'd. Where did most of the growth come from? Was it expanding those accounts up to much larger plans, or was it bringing on brand new customers altogether?
So the growth came from internally in a number of the clients, right? Like I said, the actual usage of the platform grew very, very fast in 2020. And then the revenues followed after that, and the revenues really followed with larger clients coming on board and just paying more money, frankly.
And I believe you've raised capital sort of twice, 2017 seed round and then a grant in 2019. If those are accurate, tell me how the grant works. Do you have to pay that $1.5 million euros back to the Disruptive Technology Innovation Fund, or is that basically a donation?
No, it's a donation.
That's amazing. How do you get a donation? How do you get 1.5 million euros of free money?
So it's it's a big project. We're working with Trinity College Dublin on it, and we're working with another company called Kinesense. And one of the things that we're developing there, which is really exciting, is a video management platform for policing. So they probably make more content than any other vertical out there through CCTV, body worn camera, dash cams, et cetera, and most all of that content is managed on premise. I'll tell you one little story. There's a police force in the UK that in 2019 made 32,000 taxi rides, moving content on memory stick from one place to another.
That's a lot. That's a lot of work. You're helping them solve that, which we love. The 600,000 you raised, which was a traditional, I believe, pre-seed round in 2017. Why did you raise that capital?
So here in Ireland, we've got a couple of great opportunities. One is through Enterprise Ireland, where they match funding. So we were able to raise money from angels, and then have the Enterprise Ireland guys come in and match that, which was great.
Was it pretty standard 5 million cap convertible note, that sort of thing?
It was a convertible note. There was no cap on it, believe it or not, and there was so then for the angel, it was equity.
How patient can you be? You put $1 million into this business back 3, 4, 5 years ago. You're just now breaking through that $1 million run rate. Do you ever get nervous? Oh my gosh, I'm ever going to see that money again? Is this going to work out? Like, is your whole life sort of on the line here, or is this like a small check for you?
Yeah, no, it's absolutely a big risk. I mentioned earlier about the timing, right? You live and die by timing, and when you have a vision that something that the world can be better using technology, and like I said, radically simplifying the way we work with video in business. I believe that everybody I spoke to believed it. I just don't believe that the marketplace was ready for it. Yes, it's been very nerve-wracking getting to this point. It's lovely being in the inflection point. I'm not too sure it's any easier at this point in time, because we're struggling with all those things like, cash flow and we've got to hire people to support new clients.
How many people are full-time today?
So we have 20 people.
20 people. And how many of those are engineers?
We got 8 engineers.
Wow. Any full-time sales reps? And if so, how many carry quota?
Yeah, we've got 2 full-time sales reps. That's it. And
both with quota?
No quota.
No. Why no quota target?
Because we're still out there hunting, right? And we still don't have an absolute 100% understanding of what our vertical is. So
will you ever have 100% understanding?
So I think we're getting close. So we look and we hunt we were hunting 100% in media and entertainment for a number of years, because I come from a media and entertainment background. I come from a broadcaster, right? And then we started looking into other verticals, and going back to your intro there, we're working with drinks companies, manufacturers. We worked with a cement company for a while, and now we're starting to work with the police. I mean, the police,
understood.
Huge opportunities.
Well, we'll see what happens. We're out of time though, Philippe. Though for now, let's wrap up with a famous 5. Number 1, favorite business book.
My favorite business book, yep. 4 Hour Work Week.
Number 2, is there a CEO you're following or studying?
There's a guy, Stuart Lombard, who started Ecobee, and I think he's a pretty cool guy.
Number 3, what's your favorite online tool for building Overcast?
My favorite on Live Plan.
Number 4, how many hours of sleep do you get every night?
Not enough. Let's see. I was up at my desk at 5:00 this morning. I'll be working until 8:00 tonight. That's a pretty standard day.
All right, 6-7 hours. Okay. And what's your situation? Married, single, kids?
Married, 3 kids.
Wow. And how old are you?
How old am I?
Yeah.
I'm 56.
56. Last question. Take us back to your 20-year-old self. What's something that you wish you knew?
I wish I knew how to take the risk to go out on my own.
Guys, there you have it. Coming from a guy that worked and helped build a lot of other people's companies, launched his own finally in 2016, put $1 million of his own capital into it, just passed 200 customers, about $100,000 a month in revenue, scaling nicely, very capital efficient, just $600,000 raised in a pre-seed round back in 2017, and then worked to get a $1.5 million euro grant in 2019, which he's looking to scale. 20 folks on the team today, again, helping folks basically build their own internal versions of Frame.io, manage their video content, especially for folks like police forces. Philippe, thanks for taking us to the top.
Nathan, great talking to you. Have a good day.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.